I just met a couple who were playing with their dog at the park as well, and I was talking about this beautiful outdoor studio space that I film with Willow, my dog, and do the Willow daily tax talks. And just, it's so awesome to meet people and to talk about taxes and tax education and financial education. Is that I feel like there's such a need for financial education, especially when it comes to building, protecting, and controlling wealth. Real estate is perhaps one of the best ways. You notice that most wealthy, ultra wealthy people own a lot of real estate. There's a lot of tax advantages. We're really moving the needle with timing and time value of money, especially with real estate. We're accelerating, and especially with these changes that in the one big beautiful bill that was just passed not too long ago, a couple weeks ago, that accelerating depreciation, taking that tax savings now instead of deferring it, instead of saying, hey, I'm going to take $30,000 on this building that I have as a depreciation over the next 40 years, that's 39 years for commercial buildings. I'm going to take, say, a couple $100,000 now and reduce my taxes. I might do a lazy 1031 exchange, which I might sell a building, another property, and not pay that gain, that tax, because I've got all this unused suspended loss or this deduction that I can free up. Also, I hear a lot on podcasts, people talk about cost segregation, and they talk about the accelerated depreciation. They talk about the time value of money, the stuff that I've been talking about now. But what they don't talk about is the phantom tax. What I see day in and day out, and it just breaks my heart. And this is why I want people to really think about and study and use cost segregation when they buy investment properties, because if you dispose of, say, the HVAC, the carpeting, lights, garbage disposal, refrigerator, whatever, you take it out of service, you get hit once with not being able to take the useful life, because there's going to be a useful life on the books, and you dispose of it in real life, but you didn't dispose of it on the books and it's still carrying on the books. The second is really time value of money, is that you're missing out on that time value of money. And the third is that you have to recapture it. In the past videos, I've talked about the two ways, but really the time value of money, using that deduction now and saving for later, is going to be the biggest thing. So let's do smart stuff with your money and plan and protect to build, protect, and control wealth.